Okay. Let's go quietly. Stage. How about now, guys? Check one, check two. Great. Okay. Let's share this screen then. I hope everyone had a good day. Free Cash Wednesdays. Um, right. So in the meeting, we talked about prospects of a squeeze in the US dollar, but it was data dependent. So we've got to be on our toes and we've got to be ready to flip the script, turn on a dime, and go with what we see and what the market gives us. All right. Preferably, we wanted um, to short the dollar because there was all this money down below, showing my chart there. But we had a turnaround in the US dollar on the back of US data. So I presume everyone was here for that. We don't really need to go over the data too much. But it was a strong um, ISM services, and that played in line with sentiment around a more hawkish. Just give me a sec, I'll close the window. Um, a more hawkish sentiment around the Federal Reserve. So yield shot higher, and so did the dollar. So we had to maneuver, but that's fine because we can't be right all the time on our analysis. We're trying to look through a crystal ball in that respect, but it's obviously important to be well prepared at the beginning of the session and looking for what possibilities there are, and knowing what to do when we're wrong and how to position ourselves at the time of on our chosen window of trading. So for me, it's those few hours around the Wall Street Open, and I'd suggest to others to seriously look into that because it's fruitful. Um, so let me know in the chat if there's anything in particular you want me to go over. We're now starting a new 3-day cycle in the weekly template. Today is Wednesday. We're now entering Thursday and Friday. So Wednesday is setting us up for Thursday and Friday. Okay, so um, in that respect, we can look at the US dollar, and I'll go through that while people are putting in your requests. Aussie and gold will come to. Um, right then, so what do we get? We got this dollar index being supported at this trend line. And someone asked me earlier, what's your outlook for the dollar? So it's the same. Um, I'm looking for a move into these longs. When we're going to get it, I don't know, but this thing can't keep going up forever. And I'm in anticipation of a pullback. So this is the daily chart that we're looking at, and we're making higher highs, and we've got resistance up ahead. Right, so at some point we're going to get a blow off, and we're going to benefit from it across the board. Now we are coming into Thursday. Over here somewhere. And we've got support in here. $104.21. That is structural support. Then we've got meanwhile support at the. This is a. Let's have a look what this is. Yeah, this is a W formation, so put that there. On the 4-hour chart, It's kind of a wonky W formation, but nonetheless it is. You can check these out on a line chart to make more sense of them. As you can see, that's a W. So we'll just note the neckline of that W as well on the line chart, on the 4-hour chart. And we'll mark this off as an area of support for the days ahead. Oh, 1 minute, no, 1 hour. So what's the likely scenario? Anyone care to hazard a guess at this point? Do you see any familiar patterns? Anyone hazard a guess at the direction of this dollar for the meanwhile? So we've got a displacement and a correction. And what we may find is that the market wants to continue higher. Right, so we've got this 4-hour, well, it's a 4-hour W. We'll do it on the 1 hour. Doesn't make a difference. So there's a W formation, pull back into the neckline, and the prospects of a continuation to the upside. So I don't know if anyone's holding positions. What are we doing here, guys? Are you swing traders or day traders or scalpers? Okay, I'm just marking up my chart. Well, if you care to give me an answer, and that way I can give analysis with context. Context. So these are resistances that I'm drawing. So all of this here is a resistance area. You've got 1, 2, 3, 4, 5, 6, 7. This is the 8th week of higher highs. Okay, thanks, Ed. Good to know. Have you got any trades on at the moment? Any swing stuff running? I mean, presumably it'd be good to know, or good to have an outlook on the dollar if you're holding positions, yeah? So that's why I'm asking. But anyway, so there are prospects of a continuation to the upside in this US dollar. Yields are firm, so is the 2-year, 10 and 2-year yields. I'm just having a quick browse. So within the data, the employment gauge picked up particularly strongly, and that's key, and that's probably why we got such a firm outcome in those yields. And an interesting fact in that data, that data covers 85% of US economic activity. So this series is suggesting strong growth is continuing through the third quarter. All right, so that's robust demand in the US economy. So while the US labor market metrics have eased, US activity data have been going the opposite direction recently. So if strong data persists, undermining the recent labor market easing and stalling the improvement in inflation, the FOMC will need to raise interest rates again. That's commentary coming from analysts at ANZ Bank. So they're basically this is this is what we got from Fed Powell. Fed Powell, when he spoke at the Jackson Hole, and he was talking about prospects of higher rates. It's all data dependent. So if this kind of stuff keeps coming out, the um, the FOMC meeting, which is due later this month, a hawkish hold, because it's pretty much in the bag that they're holding, but a hawkish hold. So they hold interest rates, but they lean towards higher interest rates in the coming months. Um, perhaps as soon as December, November. That would be bullish for the US dollar. Bearish for stocks. Bearish for the Aussie. You've got Zeb commenting there on the Aussie, right? So the divergence theme will come back into the market. Now, it probably would have gained even more so if we got some hawkish commentary coming out of ECB members of late. Now we're now in the blackout period on the eve. Well, we're on the eve of the blackout period, whereby we won't hear anything from ECB members, but um, the euro has so far failed to respond to those recent hawkish comments. All right, but we'll see how we get on with that. The presumption is that the ECB is still going to hold. Okay, so moving away from that, we've got the US dollar that is biased to the upside here. Okay, strong yields. Looking to dollar CAD. So dollar CAD, we had the Bank of Canada holding on rates, and just looking up some commentary here. But they have not closed the door to hikes going forward. Nonetheless, we got a rally in dollar CAD, and then that was capped in resistance yet again. All right, so we're still front side of this trend. This here now is the line in the sand. This is the higher low before the higher high. Got an M formation here. Prospects of a move in. Looks like we're starting to pick up a bid here. Prospects of a move in, but we've got resistance, and I've drawn that, I believe, just above it. Here's the neckline. Why does that now look like an R? Who knows? Start again. Now, will we come lower? No idea. On the daily chart, let's go to a different chart so we can see what's going on. Printing a doji on the day. So bears would be looking for an engulfment of that doji on the next candle on Thursday, which would give us uh, which would give us a first red day for a sell-off on Friday, and that would come into line with prospects of a sell-off on Friday in the US dollar. So again, Wednesday, Thursday are going to be building up the flow. So this is why I'm hoping for higher. I mean, it doesn't really matter, but ideally we want the dollar up high on Friday so we can short it versus other currencies and assets, pairs, etc. All right, so it looks like we're going to get the same in the Canadian dollar. So we've got Tuesday's high that we're testing. We're above. We're above last week's highs. All of this here is effectively consolidation above last week's highs, and in fact, last month's highs. So is this going to get trapped up and pull away? Are we going to pull away? And if we do, then we've got stops below here and here to target. Yeah? Okay, so let's see what happens. Does everyone follow me with that? It's not rocket science, it's obvious stuff. Okay, moving. Someone's asked for the gold price and Aussie. Right, Aussie. Okay, great stuff, sir. Front of the bearish trend. Okay, so bearish bias, biased bearish while on the front side of that trend. We've got last month's lows, yesterday's lows. We're trapped between last week's highs and last month's lows. Okay, so what I'm expecting again is a blow off in the dollar, US dollar, relatively soon. And if so, we're going to pull away from last month's lows, break the trend line, break the resistance, and move on up, clear out all of these shorts, take on stops above this inside day that was Monday. Um, Maybe we're going to get a third push. We might get a break of because you're going to have stops below these double bottom lows here, yeah? So there'll be stops in here. So maybe we'll get a move into these stops, and that will be a third push. I'm going to count this push here all as one push. So we've had one, no, let's call that one. One push, two pushes. We've come up. Is that a third push? Debatable. Perhaps we're going to have a continuation into stops for a third push and a break. Plenty of fuel to come up. Yeah? Right. And we're now going to go to gold. So gold, maybe we're going to get the third push on Thursday, today, Thursday coming up. So this is the opening range, initial balance. We've had one push, two push. Are we going to get a third push and then a move up? That's what we're looking for Friday, and therefore perhaps we're looking for shorts on Thursday, selling up high. Any questions on that? Aussie yen. Just bear with me, guys. I've got to take this very quickly. Hello, mate. All right, okay. I'm in a meeting. I'll be down with them in a minute. Harrison or Dilsey can look after them. Thanks, mate. I'll be down in a sec. Harrison, can you deal with the clients, please? It'll be 2 minutes. Right. Aussie yen. Aussie yen looks as though it's going to close as an inside day. Stops above, stops below. It's retraced. Perhaps we're going to get a continuation to the downside. What does dollar yen look like? Dollar yen. Yeah, we might get some strength here out of the yen, which would pull. The reason why I say that is we've got this W formation, plenty of resistance. Perhaps we're going to get a pullback. We would need US yields and the dollar to give more so yields. If we get that 10-year yield to come down a bit, that would be good for the yen and subsequently good for Aussie yen. Where is that? It's not on my list. It's not something I really pay too much attention to apart from using it as a barometer for risk. So we've broken structure over here. So it does look like we're coming lower. What indicator you use for candle? Which candle? Let me know. Don't understand the question. Please advise. I'm still holding. Forgot to put stop loss. Oh dear. The yellow candle you're talking about, it's inside day. There's a video in education in the Discord group, and it's got a what do you call it? It's got a Trading View logo on the thumbnail. So if you go to the education on the Discord, and you'll find there are two videos. It goes through all of my indicators, but it's the inside bars MTC. You can find it on Trading View. It's a free indicator. Right, gold. Let me tackle this and we'll wrap it up because I'm going to have to shoot off, guys. And we'll do a watch list in the morning as we get closer to the open in the US session. So, gold, you bought it, what? 1924. We are bearish here, I'm afraid. So all I can say is while we're below that trend line, the bias is bearish. Your saving grace might be that we come down to test below the weekly lows, last week's lows, and move back up. And that's what I'm in anticipation of a squeeze higher, but I think there could be some more downside to come yet. In terms of levels, I mean, a break of the lows here as well. Target, to target, right? So prospects of a move lower um, at 24. I mean, we could still come up and test if we're going to base here. Fingers crossed for you. Moving up into to test the trend line is very, very possible. But I don't want to say that that's definite and to hold your position. And I'm gonna get my look. This is my advice. If you make a mistake, just get out the trade. Simple as that. If you're wearing a loss that is greater than where you wanted it to be, you can try and be clever with it, but at the same time you can blow your account. Um, so I don't know how heavy you are in the red. I mean, it shouldn't really matter. I mean, you've my look. What I do when I make a mistake, I cut the trade. That's what I do. So you can take that or leave it. If you make a mistake, cut your trade, protect your capital. You've made a mistake, learn from it, brush yourself off, move on. There's plenty of opportunities down the line. You'll probably forget about this in time to come. Hopefully, well, if it's not too big a loss, and it'll just be part of your trading journey. And it's not something that's going to be on your mind forever. So, the psychology of this, just cut your losses. So I'm not telling you to do that. It's up to you. I'm telling you that this market could easily retrace back up. Look for signs of exhaustion in this continuation. So we've got a market here um, that is trying to move lower. It's corrected to the 38.2. And to be honest, that's something I look for the continuation. I'll measure that correction from top to bottom. 1913 would be my target at the moment, to be honest. But it's not to say that it's not going to hold. It might come down and move back up. I mean, I can give you options. You might want to cut half your losses here, put a stop loss in. Just calculate how you want to play your risk. But you might want to hedge it and buy the market. Sell. So, you know, it's a bit complicated, but so as it moves down, you're making money on your short position that counteracts the money that you're losing from your buy, right? And then you can monitor it for coming down towards this demand area, take your profits on that there, and the likelihood is that it starts moving up towards your break-even point. So that's another way of doing it, but I don't want to advise because you'll get my address and come around and shoot me. So, all right, guys. So I've got to leave it there for now, I'm afraid. Thank you very much for joining, and we'll do a nice pre-market open analysis tomorrow. So I wish you all the best. Thank you again for joining, and may the markets go with you. Thanks for being here. Okay, guys. Thank you very much.